Hey guys, Steve here from theturtlefollower.com with your weekend update for Saturday, October 25th, 2014. Hope you guys had a great week. I was actually very busy with my full-time job, so I wasn't able to be on Twitter or put out as many videos as I would have liked this week, but I'm hoping that's going to change for the upcoming week. Just to recap a couple things from last week, we did enter two new positions. Okay, we entered... Actually, I'm sorry, four positions last week. We entered Limited Brands LB on the 21st and Ross Stores on the 21st, and we entered Travelers and Apple on the 24th. So you can see our allocation now. The way this reads here, we have 23.69% in discretionary, 34% in staples, 8% in financials, and 5.99% in technology. So you could see how that allocation works out. Right now we are not going to be taking any more staples trades. We may be able to fit one more discretionary in, and we'll look at a couple in the weekly watch list this week. And just going through the weekly watch list, what I've noticed is there's a lot of single sectors that are outperforming. Staples continues to outperform, discretionary, financials are starting to outperform. So a lot of the stocks that we have are kind of in those sectors, which kind of leads to, having not enough diversity in the portfolio. So there's a very small watch list this week, just because we're not going to be adding any staples, first of all, and second of all, we want to make sure we're spreading out our money as much as possible. But you could see here on the since we've opened the positions, we're up in 7 of the 8 positions. All right, and the one position that we're down in is Apple, and we're down minimal $8, and most of that is from the commission that we had to pay. So right now everything looks nice in the portfolio. We've regained some of our losses. Obviously not a lot. We only have $642 of open profit, but at this point, it's better than having an open profit and loss that's negative. So we're going to take a look at the markets first, then we'll look at our positions. We'll go over a couple stocks that were removing from the watch list last week that triggered, but we couldn't take for certain reasons, and then we'll go over our new watch list. But before we get into that, I just want to ask, if you guys are enjoying these videos, please make sure to share them on Twitter, on StockTwits, wherever. Just because it does take some time to put these videos together. I do it right now for everybody's benefit, and the more people that can benefit from it, the greater good it's doing. So if you guys can share them, I really appreciate it. And be sure, as always, to follow me, StockTwits, Twitter, Google+, and subscribe to the YouTube channel just to make sure you're getting all future updates and in timely fashion. So with that said, that's the plug for this week. Let's get over into the portfolio and take a look at what's going on. All right, so looking at the markets here, the S&P 500 futures, we talked on Wednesday, Thursday about the potential for us to hit some resistance right around the backside of this trend line. Sure enough, Friday, we had a move in the after hours between Thursday and Friday night, or Thursday and night and Friday morning. We were down, I think, 12 or 15 handles on the futures. Everybody was kind of panicking, some Ebola thing or whatever. I can't believe Ebola is the what makes the market move at this point, but that goes to just show you how crazy some of these news channels can get with just needing to put a headline on everything. But the fact was, we opened lower on Friday and we rallied, and we pretty much closed right at the 50-day moving average. Again, these are the S&P 500 futures. And by closing right at the 50-day moving average, now we're kind of putting in that maybe this trend line's not as important as we originally thought. And we're really getting back to that V-shaped reversal, which I really didn't think was going to happen. But right now it's playing out just as every other pullback. The only difference being is that this time we actually did put in a lower low from the last pullbacks. You could see here, pullback, where they were all higher lows. And then sure enough, we got a lower low here. So the concern is now that we potentially come up to, say, 1969 and put in a lower high and roll over and now start trading in a downtrend or trading at least sideways. And sideways would be beneficial at this point. If we can kind of trade here between, say, 1920 and 1970 for a good period of time, maybe next 2 or 3 weeks, I think that really sets us up well for a breakout and then eventually a break past these old highs right around 2005. But for right now, markets obviously are at our back. Wind is at our back, which is always a good thing. So we're not fighting trends, and that really just leads us to look at long positions for right now. But again, 50-day moving average, which was support, you could see here it wasn't support and it wasn't resistance, and it wasn't support and it was resistance here. So now the question is, does it resist again, or does it not really mean anything, and 1969 is really the level? So we'll have to see how that plays out. But for right now, the market is definitely heading in the direction that's beneficial for our long positions. The Nasdaq futures, similar setup, and you could see here this one actually broke above the 50-day moving average, so not a lot of room left between the highs here at 4100 and where we are now at 4038. So an impressive move, to say the least. And what's even more impressive is we talked about this a few weeks ago about the inclusion of this linear regression channel. I'm just amazed right now how it came right back to that channel and bounced almost to a T right off of it. Obviously we'd put in some lower prices below it, but for the weekly chart we closed right at it. And then sure enough, this past week, which was a great week, we went from 3,800 to 4,038, so almost 200 points on the Nasdaq futures, 238 points to be exact. So that's just an impressive little tool here, and just to kind of keep everything in check, when everything looks like it's hitting the fan, to be able to say, hey, you know what, there is some support here based on this linear regression channel. It's just a nice little tool to have. But again, you could see here we put in a lower low. So now the concern is, do we put in a lower high? But we closed right at the highs on Friday. So I would at least say we're going to test this 4100. I just don't see a reason not to. And then the determination there is, do we consolidate or do we roll back over? The Dow futures up 131 points. All right, and again, this one's coming up to the 50-day moving average, and also this 16,829 area, which was some resistance. You could see it did break the downtrend line and has broken what was the uptrend line. So next level of resistance on the Dow is 16,800, and we'll see what happens if we again roll over when we get there, or if we can trade around it for an eventual break higher. And the last one, the Russell futures. This one was a little bit different in that it was trading in a symmetrical triangle. Okay, so we had higher lows and lower highs. Eventually it broke down below that level. Can remove this drawing right now. And now we've rallied right back up to the 50-day moving average and to the previous breakdown area. So again, this week I think should prove prove to give us at least some kind of direction of play. We've had a nice rally off the lows, but I do think the markets are in need of a rest just to sustain the longer term move. Obviously we can't continue to rally on this type of action because we're not putting in any type of support areas, similar to that trade we had in LUV, where the trade looked great. We were making money hand over fist in the beginning, but when it came down to it, it broke all the way back through those levels, and there was really nothing there to support it. No consolidation, no price levels. So that's not what you want to really see with the market. You want to see it at least build some kind of areas, some lows, some consolidations, to at least be able to gauge where it may reverse and where it may hold. But again, the 50-day moving average is now trending downward, but you can see how it's starting to kind of roll and potentially go flat. Again, we have to see what happens here if we bounce off of what was this previous uptrend line, which now looks like it may coincide with the 50-day moving average, or if we just plow right through it and test this downtrend line. So market-wise, we definitely have the wind at our back. I think we need a rest, and if we can get that rest and some consolidation, I think that sets us up very well going forward. For right now, though, we're going to continue to take some trades based on the individual stock, as we always do. And it's just nice to have the wind at our back and be able to assist us instead of fight us when we take these trades. All right, so let's go through our positions real quick. Again, we entered Apple and Travelers on Friday morning, and you can see Apple was up a little bit, but continued the strong move it had off this 95 level. And when you look at this, I mean, it rallied $10 in about 5 trading days, or 6 trading days. So you definitely want to see some kind of rest here. Let's remove these crisscrosses here that were the symmetrical triangle. But you can see here 95.06 is our stop level, and the stock looks great. Uptrend is very much intact, depending on how you want to draw this. You could draw it right across here and consider this a little fake out move. But for right now, we have blue sky territories ahead, and let's see if we can go ahead and continue pushing higher and hopefully consolidate up here to build up some steam for another move higher. Again, we don't want to see something like LUV where it rallied right through and didn't provide us any area to adjust stops to. Costco opened lower on Friday. It rallied back to almost unchanged, so a good looking setup as far as this 127 area is definitely providing some buying power, some support, and you can see the trend line's all the way down here. So for right now, 119 is our stop level. If we can get a breakout over 131, then I think we're going to adjust stop to 122.05. So that'll be this low from 1016, and again, we would just need to see a breakout over these tails here. But for right now, I'm concerned that we may just be in a large trading range, so I want to see that breakout before we do so. Home Depot, again, up a little bit on Friday. You can see the rally it's had off of this gap. All right, it came back down, tested that gap, rallied straight through the consolidation, back over the 50-day moving average, back over previous resistance, and now we're pretty much sitting at all-time closing highs. All right, not all-time highs. All-time highs were intraday on the 23rd, but all-time closing highs today. So at 95. Again, I really see no reason this doesn't test $100. It just seems that most stocks that that go through 90 at least test 100. But we're going to play the price action, see how that performs. But the fact is, most of our stocks are at their highs, and that's a good sign for us, saying that we're in strong stocks, while the market's still trying to find those old highs. Kroger again had a couple topping tails here on the 22nd and 23rd, but closed a little bit lower, down 10 cents, nothing major. Next stop level I see in Kroger is probably going to be here at this 50.86 or 51.43. Probably more likely 50.86 for this large tail downward. And again, what we need to see on that is just some staying power up in this range and then a breakout higher. Again, we want to make sure that we're building on some solid bases before we trail those stops. LB, this was down the most on Friday, down 1.17, but look at where it is. All right, it's within just about 1.17% of its all-time highs. So nothing really wrong with this trend at all. This looks like it's potentially starting a more accelerated trend line higher. All right, we have the longer-term trend. The 50-day moving average is supporting. It's a nice breakout here. Right now, we are still using 63.36. Potentially, we can move our stop up maybe to 64.50. But again, I want to see some maybe sideways action and a breakout higher before we do so. I'm not too, at this point, I'm not really too, what's the right word? I'm not really too not motivated. I don't want to move stops aggressively. I want to let these stocks work. I want to let them kind of just play out and see how it works out. All right, next one is Pepsi. And you can see Pepsi's kind of consolidating right around that breakout level. It's had a few topping tails back here when we entered on the 8th, the 9th, and the 10th. But right now it's just working. And again, this could potentially be very close to all-time closing highs, all right? All-time closing highs were here on the 10th. So, but nice looking little consolidation there after a move higher, consolidating right above resistance, and hopefully it sets us up for another move higher on a breakout over, say, 95. And again, stop on that is still $90. ROST up 0.52%, and this one was a good entry. Okay, we entered here, or this was our signal here on the 20th. We entered on the 21st, and we're able to get some good days out of it. And you can see here it's putting in some smaller candles, which is another form of consolidation. But here on the weekly, you can see it broke that downtrend line, moved sideways, and now is breaking out again. So we have some definitely room to run here on the linear regression channel. And the more it consolidates and moves closer to this trend line and allows that 50-day moving average to catch up, the better we're going to be for the long term. And the last one that we entered again on Friday morning was Travelers. We entered on this breakout here. Okay, we were waiting for the break over 95.91, or say 96, which basically puts it at all-time highs, and we had some continuation here on the 24th. So again, we entered that position Friday morning. Our stop is $91, which gives us plenty of room, and we definitely sized our position small enough that we're going to probably add to this position if we get the opportunity. So that's it for the positions. One, or I should say, a couple that I want to go over from last week's watch list, and then one that I went through this watch list and is going to trigger a trade for us is CB. So let's just go through the couple from last week's watch list. These all look like great setups. Rules are going to keep us out because earnings are within 2 weeks away. But ICE over 204.29 was the trigger. We got that on Friday, so this would be a great looking setup. You could have your stop down here at 194 if you want to take that trade. Just be aware earnings are coming up in less than 2 weeks. CME Group, another financial, okay, broke out over 82, broke out of this downtrend channel. And again, if you want to enter that one, I would put your stop probably down here 75.67, but earnings are next week. ADP up 1.01%. You can see it broke out higher. Okay, so if you want to take that trade, it's a good trade. You could put your stop here at 70.79, say 70.50 if you want. But again, earnings are next week. Allstate, close to breaking out. All right, so we're actually going to keep this one on the watch list. Take that off of this. So again, close to breaking out. Technically did break out. Earnings again are the 29th. So I want to see what happens coming this week if it moves back into this consolidation and towards this trend line and fills this area in. And if so, then maybe we can enter after earnings pass. Altrea, okay, broke out. Looks good. You want to enter this one, you could either put your stop here at 44.78, or even you could probably move it down a little bit more and put it here at 43.07. But again, earnings are this week, so no play on that. DVA, this one was one that did trigger. We did not take that trigger. Earnings, we would have been 2 weeks away, but there's no yield on the dividends here, so we passed on that one. When I added it to the watch list, for some reason I didn't realize that there was no dividends, so we are going to pass on that one. All right, the one that we are going to be entering off of this week's watch list is CB, okay, Chubb Corp, and that is because as I went through this week's watch list, it looks like it's got a nice setup. Okay, you could see it's pretty much breaking out to all-time or 52-week highs. Okay, not all-time highs, but at least close to 52-week highs, over 94.20. Okay, so a nice setup. You could see here the trend line is just starting to develop. 50-day moving average trend line, nice area for stop. Okay, you can see that area is very well defined, and earnings have passed. All right, they were on the 23rd, which led us to this nice breakout here on Friday. So again, we'll be entering Monday morning, hopefully somewhere around 96.40, and we're going to be putting our stop right here at 90.50. But that is a financial. A lot of the stocks that I went through, just a couple off the top of my head, this is what the pattern looks like. All right, it had a nice breakout, it broke down, and now it's rallied right back through it. So the watch list this week is very small because the reason for that is the stops are way too far away. All right, so there's no good areas to put stops in. So I could fill this watch list up with probably another 20 stocks that look great, but the stops are way too far away. So we'll just let them work and maybe come back and revisit them next week. So, but again, this is a very tough pattern to trade. This is one reason that when you short a stock, you want to take your profits off, because if you're still in an uptrend and you're moving, kind of a counter trade to the way the trend is, then this is the kind of rally that can sometimes ensue and really get you stuck here. So that's another little tip. Again, when you're short a stock, I definitely always recommend take it off at targets. Very different than when you're long a stock with no targets ahead. All right, so like I said, the watch list is small this week just because a couple different reasons. One is a lot of stocks were in the consumer discretionary, consumer staple, or financial sector. Second is a lot of patterns look like this where the stops are too far away. And the third is that, there's just a lot of good setups, but there's only a few really, really good setups. And those are the ones I highlighted. We don't have a lot of room left in the portfolio, so I want to make sure we're adding what I consider to be the best setups. And sure enough, that's what I did. So you can see here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. All right, so there's going to be 13 stocks on this week's watch list. And again, we'll be entering CB at the open on Monday to give us 9 positions in the portfolio. So let's take a quick look through our watch list. ABC, okay, this was on from last week. You can see that's one setting up very nicely. Earnings are coming up, all right, but this one is setting up very nice. Let's see what happens if we can consolidate and then eventually break out maybe on an earnings move. That would be the best case scenario for that one. But over 78.30 is where we want to look for an entry. Let's see, what is this? ACE Limited. All right, so over 107.27. Earnings have passed. And this one, the difference is that, where stop would be here at 101. So that's within 10%. And we'll be able to give us a good percentage or a good size position. So that's why this one's on the list. But again, over 107.27 is the is the breakout level. Allstate we talked about. All right, so let's see how that one reacts if that one kind of stays in the box until earnings, similar to ABC. Burke B, all right, this one we're still waiting on the break over 141.20. And again, stop level then would be come down here. Let's see what level that's at. Stop level would be 132. So, all right, so you're still within that 10% rule, and that's why this one's still on the list. Again, some of these other ones, your stop's all the way down here, say at 120, and your breakout level is 141. It just doesn't give you a good size position. CTAS is a new one for the list. You can see that uptrend very much intact. And now it's consolidating between 71 and 67. All right, so we got a breakout over 71.65, and we would probably use a little bit lower, maybe 65 right around here as our stop level. Centurylink still kind of holding on, but you could see this one maybe looks like it's starting to put in a series of lower highs, and that's kind of interesting. Again, we talked about this when we first started talking about the linear regression channel, how this one was pushing into overbought conditions and potentially may want to roll over, and that's kind of what looks like it may be happening here. If this proves to be another low, or a lower high I should say, and then we can get a lower low here, this one may be one that you would want to short as opposed to buying, obviously. Green Mountain Coffee Roasters. Okay, this one's setting up good. The only reason this one's still on the list, again, the stop is, if we were to take it now, would be 127.53. What I'm looking at instead is if this were to move and say this became the consolidation after that 50-day moving average slides up above it. So maybe this one kind of goes sideways for a little bit longer and maybe fills in this type of box. And then we could be able to set our stop here at 135 on a break over 146. But for right now, that one's a little bit of a stretch. But it looks really good as far as if that plays out. Lockheed Martin over 182 is our trigger. And then we would be able to probably have our stop here at, say, 170 or even if we really want to stretch it, 165. All right, that would still give us within $18 of the high, and that would give us a decent sized position. And again, you could see linear regression channel, we're bouncing off of this support area, so I think that one would benefit and play out very well. Nike, similar situation. Okay, so let's see if we can get that break over, let's call it 92. 91.50, let's call it. All right, so if we can get that break over 92 or 91.50, then we could really set our stop here. That's a little bit tight, but we wouldn't be able to go down here to 79. That would just be too wide. So we would have to be more aggressive on it if we want to take this one and set it at 84. Procter Gamble, another staple stock, but you could see how this one's setting up. Probably not going to take this just because of the allocation in the portfolio, but for those who maybe didn't take some of those other trades, this one looks good. Earnings came out, so now you're just really waiting on a break over 85.20, and I think a stop at 81.66 is more than sufficient for that one. RSG, all right, this was another one similar to Apple we got stopped out of, and it's gone ahead and rallied. So this was our analysis from the last time we had a lower consolidation. We talked about potentially even shorting it here. I'm glad we did not. But right now, if we take all these drawings away, what I see here is a potential larger consolidation. All right, and a longer trend line. All right, so it's good to sometimes get stopped out of these trades and then you can reevaluate them with a fresh, clear head. But this one looks great. If we can get a breakout over 39.50, I think stop probably goes maybe even down a little bit lower to this small consolidation here at 36. All right, or depending on where we break out, 37.20 is probably more than sufficient actually. All right, but again, earnings coming up this week. SPG earnings passed. All right, and you can see here over 173.19 and under 162.81. All right, that's essentially your levels. So we're waiting for a breakout over that 173 level. And the last one, another discretionary, VF Corp. Okay, so you could see we had last week we had Ross Stores, L Brands, and Nordstrom's trigger. And Nordstrom's we couldn't take because of the earnings situation. But VF Corp earnings have passed. So right now you're just waiting on a break over 67.43. And stop would probably just be around that 10% level. So this one would be a little bit further than we'd like. But, Nike was another discretionary. And I think that's the only other discretionary. But you could see here on the left, financial, staple, discretionary, staple, financial. So I would say, maybe 8 out of the 13 are in those 3 sectors. The other sectors just weren't really showing a lot of promise. So we'll stay away from those for now. That's not a problem. But again, good watch list set up for this week. We'll be adding CB to the portfolio on Monday morning. And we'll see how a week plays out. But for right now, I think we're going to be in good position. We'll probably be up to about 75-78% allocation in the portfolio with a couple great setups. So no rush to get back in and fill the portfolio up, especially if we're not going to be using much margin. And we're still going to probably use some, but I don't want to go to the extent that we were at the last time. So that's why we've now sized the positions down to 0.5%. Because again, it's how I trade my personal portfolio. I will use margin, but I will never be at 50% like I was. It eats into your profits too much, and I know we don't show that with the model portfolio, but if we were, I guarantee our profits would be a lot lower just because of some of the fees that we would incur for margin. So I want to just set it up the right way and show an accurate portrayal of how I would personally trade. So that's it for this weekend, guys. Definitely, like I said earlier, please make sure you share the video if you find it beneficial. Hit that like button below. Leave some comments if you have other stocks you want to add to the list. We'll take a look at them. So add some comments to the comment section below. Follow me, StockTwits, Twitter, Google+. Subscribe to the YouTube channel and subscribe to the nightly recap on the website. With that said, have a great rest of the weekend, and we'll see you Monday. Take care.